All right, what's up? What's up? Welcome back for the recap video for after the market close. Today was a pretty decent day. We had some couple stocks, IVVD and ICCT. Also a little bit of PBLA as well. So we can review some of these stocks. However, I mainly focused on ICCT right out of the gates. Was able to take some decent size, and I was there. I definitely showed up today. I was there at the right moments, sizing up at the right moments when the opportunity was there, and my P&L definitely showed today. So up 535, which is pretty decent. Definitely one of the bigger days this year. So I'm pretty happy with that. However, one thing that I need to work on is, there was another stock, IVVD, that started to pop up after ICCT started to flush down, and I didn't want to trade it. I was shying away because I had that fear of giving back the profits that I got on ICCT. So that's one thing that I need to definitely work on. Even if I can just take a couple stabs to begin with on small size, and then maybe start sizing up after I have a cushion on that specific ticker, because that's how I'm going to be able to have those four figure days, and then eventually more from there is by rolling those profits into another trade, and continually trading while there's still opportunity there. IVVD was making moves during the period of time that I perform well in. So I performed very well between 9:30 and 10:30. And IVVD was right there, and I shied away from it. So that's definitely the main thing that I'm a little bit disappointed with today with my performance. But yeah, I think I did pretty well though with ICCT. I was analyzing this one pre-market, and I did like this one during the pre-market pump. And I was saying, like, yeah, I think we can definitely have room up to 3. We're creeping up pre-market. We have some room up to the $3 mark. Did have a huge sell-off from a couple months ago, from $20 a share. So this is more of like a bottom bounce setup, and that volume is pretty decent. We were creeping up towards the 289, which was the pre-market high, and I definitely liked this one the best. And we got a really nice just opening gap and go trade up to 3, broke out of 3, and started to consolidate. And I thought we were going to get some good continuation, but we just kept getting stuffed up in this area. And I did give back a little bit of profit. I was up 580 at the most, and dropped down to 535 in this area, just getting chopped out at the high on this specific candle, actually, which we can review. And then once it started to fade, I moved over to IVVD, but oh, man, like, I didn't want to give back the profits on IVVD, and that's not good because there was opportunity. There was opportunity on IVVD, and I was trying to get a pulse on it, and I was trying to get a pulse on it, but it just kept going higher without me, and I was looking for a bigger pullback. And instead, I should have just been taking some small stabs, specifically on this breakout, but then also on the break of 350, the break of 4. Some of these micro pullbacks could have been great starters. This dip here would have been a great opportunity, and as well as some of these dips down in this area as well. But I was shying away because I didn't want to give back the profit that I made on the day, which is not good. But it's always something to just continually be aware of your weak spots, and just keep that in mind, moving forward when it does happen again. Because in a hot market, there's going to be opportunity for several hours a day, and if you do make a great decent profit, if you make your daily goal within the first 10 minutes of the market open, but there's continually more opportunity, you could be leaving so much money on the table. And statistically, there's only going to be just a few weeks of every year where you make like 50% of your profits on the year, and you don't want to be missing out on that. You don't want to be undercapitalizing on that, on those momentum and those nice setups. Anyhow, let's go through the video, the live recap. So this is a perfect example why I use one. Why I use okay, we're back. Why I use one share at the market open, because look here, my order is sticking here, and I just want to, I do that just to make sure that my orders are going to go through nice and clean, no sticky orders. And here we are, we have one order just sticking, and that's never what you like to see. So that's why I always use one share, because sometimes that does happen, and if that does happen on 1,000, 2,000 shares, that could be a costly mistake. And that's happened to me before, which is why I implemented this little rule that I use at the first 1 minute candle. So now that I know the fills are going through clean, now I'm more confident to put an actual size. So ICCT, my setup is just catching through the pre-market highs. I just want to catch the break of pre-market highs. So I see we're struggling, and we're not breaking down. So as we go and retest these highs again, act up to 75, I add in 1,500 shares at 70, and then take it off here at 74. I did miss that huge 10-cent pop, but we have 37,000 shares here at 286, so it's looking good for the break of pre-market highs. Back in 1,500 shares for the break of pre-market highs at 86 after seeing that bid, and taking my profit there at 89, so 3 cents a share on 1,500 shares. So very nice. I'm there with the share size. Back in at 98, I want to see the break of 3. This is actually a very aggressive buy, but I take that off for break even after I realize that's very aggressive. We push back up to 3, and I just buy for the break of 3, and again, that's a very aggressive trade. But for the break of the whole dollar, or right out of the market open, there's high volume on this specific ticker. I'm looking to get aggressive. So we move up to 3. As soon as I see 3 there, look at that bid, 34,000 at 98. Looks like there was somebody covering short, probably holding for a while today. But yeah, I catch that break of 3. I was in at 99, and I'm out at 07. So nice 8-cent trade on 1,500 shares. Very, very nice. And now I'm looking to, I want to push it even more. I want to see how far I can push it. I'm up to 2,000 now. I think my next few trades are going to be 2,000 shares. So on a $3 stock, 2,000 shares, that's $6,000. Got a flash down, so sort of like an extended dip. I'm in there at 84, and with something like this that has high volume, it's a leading gapper, has a low float, I want to see that dip react immediately. It needs to be an immediate profit. If it's not an immediate profit, and I don't see this wick like I do right now, I am out of the trade. And I'm looking to get in lower. If it doesn't happen immediately, a lot of the times it means that there's a lot of sellers still in, and the price is going to go lower. So I learned my lesson with that as well. So as soon as I bought that panic dip, immediately 12 cents in profit right there. Beautiful trade. That's over a $200 trade right there in less than a few seconds. Back in at 89, back out at 88. This is also on 2,000 share. Oh no, I was on 1,500. I think I'm going to do another 2,000 share trade. Yeah, I was in there at 98, out at 97.7. Back over for break over 3. I got in at 1,500, out at 01. I did miss a little bit. I should have been scaling out there. Back in at 09 after that breakout. And then I'm out at, when did I get out? Out at 12, so 2 cents there. So I missed a little bit on that breakout and after that break of 3, but overall still pretty decent. The next trade, so we have a pretty decent dip here as well, but I don't think I take it. Down to 3. Yeah, down to 3. It was like 303 up to 309 was sort of the trade there. A little bit of a riskier trade, but it still would have worked. I'm trying to get closer to 3, I think. I think I was trying to get a dip off 3. Okay, so we broke down through 3. We saw 299 on the bid, and we reclaimed 3. So I got in at 98. We broke back over 3. We're holding 3. You see how many times it broke to 99 on the bid, and then back to 3, and then 98, then back to 3. I mean, it just shows that there's buyers in that area. And I take it off at 3 flat. And then I got back in at 99 looking for another bounce, but looks like we flushed down a little bit. Taking about a 3-cent loss there. Got back in at 96. So I'm sort of like we call it recycling shares. So, trying to fish for the bottom. So on a dip, maybe putting in your entry there, and then if it doesn't immediately bounce, selling for break even, and then having come down a couple cents lower, buying again, looking for that bounce. If it doesn't bounce yet, selling for break even, waiting for it to go lower again, and then buying, and then you finally hit that bottom and you get that 10-cent bounce. That's sort of what we're doing here, and that is sort of what we call fishing for the bottom and recycling shares. So very tight risk. Ideally, in a perfect scenario, you're only risking break even on these sort of dips. You're not risking anything. You're not risking more than 1 cent. Because if it starts to go against you, the idea is to buy back at a lower price. If you think the stock's going to go lower, why don't you just sell now and then buy back when it's lower? Instead of holding that position and adding lower, you're better off just cutting it, break even, and then buying lower. Because it does keep your risk a little bit tighter. So we reclaimed 3 again, back in at 301. I'm back down to 1,000 shares now. So I got in at 301. I think I was out at 302. So quick $10 there. In at 301, out at 3. So pretty much gave that $10 right back. Dipping again here. Now I'm looking for a potential 3-bar play. So that's going to be, you got your front side leg, one red candle, second red candle, just dipping a little bit lower, and then the third candle ripping back up to the highs. That's what I was looking for here. So it's 2,000 shares at 93, taking half off at 94, and taking the rest off break even because it's dipping down lower. It's exactly what I'm talking about. Fishing for the bottom. We're going down lower now. Now we're at 89. If I was holding those 2,000 shares, I would be underwater 4 cents share. I'd be down 80 to $100, and I would be incurring more risk, even though the setup is still valid. Even though the setup is still valid, but I can get better. I can get a better entry at a lower risk entry, pretty much. So that's why I cut at break even, looking to get in lower, or even just giving it time, just to understand where it's going to go from there, or if it's going to find support or not. That's also a beneficial aspect of kind of recycling your shares instead of holding through it. So back in at 91, back out at 91. So I was break even. Back in at 91. Trying to see if 90 holds. 90's holding. 90's holding. Okay, so it looks like I potentially may have found the bottom here. So whenever you're on a dip trade on a frontside move, it definitely, sometimes something like this, since it's early in the frontside move, I don't know if this is going to go up to $4, $5, at this point. I know it only went up, it actually topped out at 320, but I don't know that in this moment. So a lot of times this first pullback or the second pullback, you actually want to hold. You don't want to take your 4 cents of profit. You want to actually hold for maybe 10 or 20 cents. So in the first pullback and the second pullback is more likely to resolve in a continuation move versus a third or fourth pullback on a frontside move, which is more likely to fail. So we're in at 91. So I take kind of half off there at 94. And then I add back here for the break of 3. So I see 3. It's definitely strong off the lows here. We got a bottom and tail off the 9 EMA. Front side move. High volume on green candles. Low volume on red candles. Which is good. So everything's looking good here. I add back my 500 back in at 94, I think. And then we flip for the break of 3. I add another 500 shares at 303. And then I'm taking it off at taking some off at 304. And then I want to see a rip back up to 320, but we don't see it. So I take it off at 308. We top out there at like 310, and then we start pulling back. I wanted to see a strong move up to 320, but since we didn't see it, I just took it off there. And that was a very nice trade there. So I was in at 94. I took some off. I was in at 91, took some off at 94, added back at 96 for the break of 3, added at the break of 3, and then taking it off at 304, 304, and 308. So very nice, 10-cent sort of trade there on decent share size. That was probably another $100 to $150 trade right there. From there, I don't think I take any trades in this area. What's this trade here? I don't think that was much. I don't think that was anything. I don't think I don't really take any serious size because I see that we're kind of chopping around. It's not really clear which direction we're going through or going to. It kind of looks like a bull flag, but we're not really resolving. And here I thought this was going to be it. So I got in 500 shares looking to add in, but we didn't immediately go, so I took back out. And here I thought this was going to be it right here. This should have been it. If this was strong, this would have been a continuation move. But there's a lot of sellers. You can feel it. You can feel it. It's moving slow. There's a lot going on in the tape, but the price is moving so slow. And then look at that. This would have been a good panic dip, but I didn't take it. That would have been a decent panic dip. And a reclaim, and then this candle, I thought this was going to be it. I was like, all right, we held that panic dip. We held that false breakout. We're back up. This is definitely, this has to work out, right? We're reclaiming the top of this candle, the top of the wick. I thought we were going to really squeeze out up to like 350. And pull it up here. All right, I thought this was it. I jumped in 400 shares for the break of the high, and we pulled back. We hesitated there, so I immediately got out because, if I was holding, now I'm down. I would have been down 20 cents a share. So, as soon as, for a breakout, it's got to immediately go, or you're taking it off break even or small loss, because there's the risk of something like this. That setup is no longer a profitable strategy. So, unless you get in at a lower entry. Let's say you get in at, ideally that setup, you should have been getting in at 310 anyways. Not all the way up here at 317 where I got in. So it really also depends on your entry as well. If you're getting in near the high, it's got to be breakout or bailout. If you get in anticipating a little bit earlier, then you can give it a little bit of room. But even still, if it's a false breakout, you could be taking some heavy losses. That was it. We flushed down on ICCT, and I pretty much walked on that. But here was the move that was like IVVT. At this point, I'm like, okay, why is this volume coming in at 9:50 and the news came out at 7 a.m.? So I thought this was just going to be a pump and dump. But this thing, just look at the volume on this here coming in right now. So tape starts to speed up. Volume increasing, look at that, relative volume all the way back up to 320 very fast. And then boom, I should have been in there for 320, that break at 320. And there it just goes on a tear. It's just going to go on an absolute tear all all the way up. I could have even got this pullback here. We have increasing volume on a front side move. It does have news. We break 350. We make a move up to 4. And even the break of 4 was a little aggressive, but still it worked out. It was a really strong break of 4. And then we got that first pullback down here, which is pretty decent. And that would have been a decent dip down right under through 4 for a panic dip. Because it did start forming that bottoming tail, reclaiming back to the highs and breaking out all the way up to 471. Crazy, 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 crazy. Another good dip down in this area. Down in here is also a very nice dip. So really good opportunity on IVVD, but I was not able to capitalize on it. I didn't capitalize on it. I think I was a little bit too fearful of giving back what I made on ICCT. And I wasn't quite sure if it was a hot market because ICCT didn't really hold up. I didn't really see anything else. And then we had this stock, which had news, but it didn't really start moving until about 9:55. So I didn't really think this was going to be have any sort of support. I didn't know if I could really trust any sort of these pullbacks or if they were just going to flush back down. So it is what it is. I can study up on IVVD. Continually be watching the film, rewatching the day and pinpointing those proper entries and exits. And the only thing I can do is, learn up, be better for tomorrow. And tomorrow we'll be back and with a clean slate. We'll be back tomorrow with a $0 P&L, just like nothing happened today. So it's always good to keep in mind, no matter how bad it gets in one day or how great it is on one day, the next day you're reset back to 0, and the day before really didn't matter. So tomorrow we're going to come back and we are going to see what's in play and get aggressive on the A+ setups and leave everything else alone. So that's the plan for tomorrow. If you guys are still watching, hit that thumbs up button. If you're a new viewer, hit that subscribe button. We can take a look quick at the statistics for today. Just pull this up. So 530 after my commissions on my reg fees. Largest win, 201. Largest loss, only $35. So very nice. I like to see that. Good accuracy, 53%. And profit margin, 75%. So getting back a very small amount of what I made today, which is good. And then, the only thing I got to work on is, continually keeping that sizing up at the right moments and not sizing down out of fear of loss or fear of failure. But I should, if there's still opportunity and we're in that window of time that I'm performing, that I perform well in, keep the size high. Keep the size high, keep the risk high, because, if you do have a profitable strategy and you have to trust that after a certain amount of trades, you're going to be statistically profitable. And that's how, you can be able to really grow your account. Because if you don't really push your comfort zone at the right moments and at the right setups, then you will never be able to get to those higher echelon levels of trading that we all aspire to get to. So thanks for watching the recap. Hope to see you guys tomorrow for the pre-market pump. I'll catch you guys later. Peace.